So I said that the shareholders' assertion that IS 12 makes adjustments for tax that do not reflect actual tax paid is true. Now, according to IS 12, a deferred tax will be recognized when the carrying value of an asset or liability is different from that asset's or liabilities tax base. So, where an asset is greater, or where the carrying value
for an asset is greater.
of an asset is greater
On the tax base.
or the carrying value of a liability less than the tax base, this would lead to a taxable temporary difference. If the opposite occurs, taxable temporary difference. I want to continue on that point. So taxable temporary difference, comma, which in turn would give rise
Assets.
to a deferred tax liability now.
Okay.
If carrying value of asset is greater than tax base, or if carrying value of liability is less than tax base, then that will give rise to a taxable temporary difference. And the taxable temporary difference times the tax rate will give rise to a deferred tax liability. So said, full stop. So if the opposite occurs, and I want to take that out of here. So if the opposite occurs, it would lead to a deductible temporary difference so giving rise to a deferred tax asset. These tax assets and liabilities do not relate to tax to be paid in a period. Now, though deferred taxes are recognized, are only recognized in the statement of financial position in line with the conceptual framework. So the conceptual framework says that all assets and liabilities must be recognized in statement of financial position, and then income and expenses should be recognized in statement of profit or loss. So this follows what the conceptual framework wants. So though deferred taxes are recognized in statement of financial position in line with the conceptual framework, they do not meet the conceptual framework's definition of assets and liabilities. So, like I always try to do in discursive questions, I want to show you how fairly easy it is to get your marks in the exam. So now, I've made my first point on top, second, third, fourth, fifth. So now, the framework defines, and we're back to this same point, an asset. What's the framework's definition of an asset?
A resource controlled by
Now come and see the, I'm not really sure that you would understand clearly what I'm saying, but now I'm going to tie my points together. So the framework defines an asset. The framework defines an asset as a present, that's the important point, a present resource
present. Okay, yeah.
controlled by an entity as a result of past transactions. And a liability as present obligation as as a present obligation to an entity as a result of past events. Deferred taxes both assets and liabilities are not present resources or obligations. You don't have any immediate obligation to pay a deferred tax. You don't have any immediate resource as a result of a deferred tax asset, and you don't have any immediate obligation, any present obligation as a result of a deferred tax liability. And so this makes deferred taxes not in line with the conceptual framework. And that's what the question asked us, if I remember correctly. It says, in response to the shareholder statement regarding the concept of deferred tax, discuss the conceptual basis. And that's what I've done for the recognition of deferred taxes using a temporary difference approach to deferred taxes. And I've explained to whoever is listening to me the basis of those things. They've given me 7 marks. What I to do is to see if I can get 7 marks. So my first point 1, my second point 2, my third point 3 was a very long point because it was describing. My fourth point is still related to the third point, so I'm not really sure I get a mark for that. My fifth point is here, which is the absolute discussion of that. My sixth point here, and my 7 points there. So I feel like I've done a fairly good work on this answer. Do you get what I'm saying?
Yes.
Do you understand the concept? Because I don't know that. I've studied taxes for a very long time, and so I know what is bothering me. I'm trying to keep my answer relatively simple so that you can see that I'm answering questions, and that is one of the things that I want us to use to do a lot, is to see that answering questions, the discursive parts of questions are actually not that bad, because I know that many people, once I see the kind of disappointment when someone comes and is like, oh, this thing is all writing and writing and writing, and it feels like if it is difficult, but it's actually quite doable, quite easy. Any question? Is this fine? Can we move on?
So what I want to understand is, anytime we are trying to define a standard, you always have to try to link it back to the framework.
No. This question asks you conceptual basis for recognition. So we're using the conceptual framework.
Okay, that's how you're linking.
Yes, and this is not the first time. I think that there are two questions now, or 3 sets, that where we've seen that. Now, one of the things I know that you're going to likely see is some discussion that is regarding the framework. And once you appreciate the framework, I've always said this thing: if you're doing reporting and the framework is shaky for you, then you're going to run into trouble. The basic definitions of asset, liability, income, expense, equity, those other fundamental assumptions of relevance and faithful representation, the characteristics, the enhancing characteristics, and all those other smaller discussions with substance over form, accrual, matching, and the rest of them to be at your fingertips, because you will use them from time to time in getting brilliant answers, brilliant responses to issues raised.
Okay. So that you'll be checking it.
Okay, so I think that this is quite fair. If we're talking about marks in the exam, then this should be around that 7 marks for you. And like I said, what is important to me is that you see that it's not really hard to get them. I could go on, I've shortened a few things. I didn't extend, I summarized these things and did the opposite, of course, without necessarily saying the opposite, of course, being that where carrying value of asset is less and carrying value of liability is greater than the tax base, then this would have led to that deductible temporary difference that we talked about. But trying to shorten so that I know that what I need to do is about 12 to 16 words to get a mark averagely. However, some things will not be possible for me to get within that, if you will, framework. And then there are some things that you will have to ramble and ramble and ramble for you to be looking for 12 words. It's harder to get those 12 words together for some points. Some points will be made in about 10 words. I like the last line: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Okay, that's up to 12. I was looking at it like about 10 before, but that point is very, very important. And all I've done, and this is one of the things I say, that especially with discursive questions, and as this our exam evolves into a lot of discursive things, then having an answer in the back of the book, you cannot replicate that answer. And like I've been emphasizing very, very much recently, a lot of those answers are too detailed and say too many things that it's hard for you to, first of all, comprehend them. And secondly, it will not even make a good answer in the exam, because that amount of detail is not really helping a marker or helping you to be able to maximize your use of time. Answers that are, this is fairly detailed, but it is not, it's easy for me to see how to mark it. And I've always told you about paragraphing. My first point is on first paragraph. My second point is on second paragraph. My third point is another paragraph. My fourth is one. My fifth is one. My sixth is one. My seventh is one. It's easy if I wanted to just add one more thing so that I can garnish or be sure that even if they didn't give me one for one, they will give me one. But if you now write 15 paragraphs for a 7 or 15 different points for a 7-mark question, that's not doing well, because ultimately you're now going to struggle with some other parts of your exam. Most of what I've written here are things that we've discussed prior to now, and things that I feel that are replicable under exam conditions. Any question?
Nope. Maybe when we keep solving questions, we'll become better. Okay. Because sometimes I feel it's hard to do these things.
That's why I don't have a preset question or a preset answer. I want to come and think about it and work with it based on what we've discussed. It's really, at this point now, it helps me to be able to prove to you that what we are discussing many times, they're not useless. And as this is what we do constantly, we'll go back to what we discussed here and there, and sometimes tie some of them together so that you see that it's really something that you can think of on your own. Because I really don't, I'm not sure that 80% of what I've said here is stuff that we have talked about, stuff that is in your notes, and stuff that you know. It's just, do you understand how to put it together so that it is fluid? Someone can read this thing, appreciate what you're writing, and see where mark allocations can be for your discussion. That's all. Okay, so the B part of the question now says that discuss the view of the finance director and the shareholder that tax reconciliation is difficult to understand, and comment on the finance director's suggestion that it should not be disclosed. So I'll say it is true that in most cases, tax reconciliation is difficult. To understand as the actuarial assumptions used might be complex and the differences between the standard and different tax jurisdictions make the accounting difficult. However, IAS 12 requires disclosures, and though not every disclosure is mandatory, omitting a fundamental disclosure because only on the basis of its complexity goes against the concept of understandability according to the framework. 3 points, so 2 very long ones. Now, understandability requires that even though that some economic phenomena are inherently complex, but should not be excluded only on the basis of their complexity if they are relevant to the user's understanding or appreciation in the financial statements. Do you get what I'm saying there? Do you get what I'm saying?
Maybe we have to read it. Jesus.
Okay, to read what I've said, or to read the question again, or to read the standard again.
No, we're just copying.
Okay, but what I've said,
your approach. Yeah, this.
Sir?
No, I mean the approach of the question. That is what I'm saying.
Okay, but what they've said is discuss the view of the finance director and the shareholder that the tax reconciliation is difficult to understand, and comment on the finance director's suggestion that it should not be disclosed. And I just found it quite easy for me to say that it is true that in most cases tax reconciliation is difficult to understand, as the actuarial assumptions used might be complex, and that's the truth. That tax is inherently boring, complex, unfriendly at times. We now said, and the differences between the standard, that's the IAS 12 now, and different tax jurisdictions make the accounting difficult. So that's a very straightforward, just discussion, introducing. It's 3 marks, so I want to be as brief as possible, but give myself a platform. Now I said, however, IAS 12 requires disclosure, or requires numerous disclosures, and though not every disclosure is mandatory, omitting a fundamental disclosure like what is in this scenario, only on the basis of its complexity, goes against the concept of understandability according to the framework. And then I've linked understandability here because it will help me first sort the first part of what he's saying. And then in describing understandability, I can pick a point too. So I said understandability requires that, and I didn't want to go through the whole, because understandability is the concept that we should present information in a way that is understandable to the readers. However, is the second part that I'm looking at in the discussion of understandability, which is it requires that even though some economic phenomena are inherently complex, they should not be excluded only on the basis of their complexity if they are relevant for users to be able to understand or appreciate what exactly is being presented in the financial statements.
Yeah, yes, okay.
So all I'm just doing is get a logical flow. And like I'm saying, I'm almost always criticizing the fact that for many other answers you will see, their complexity might be significant, so that you're not really sure exactly what you're reading and how to understand what you're reading. In this case, all I'm trying to do is follow through on what we've discussed before. I'm not saying anything new. However, I might write it in a way that you will now start seeing that you can write it too. Okay, now I spent so much time on the unimportant part. I don't know that they're unimportant because writing is going to be a big deal. The part I wanted to really focus on was the part that helps us really treat how income taxes work and the accounting for them. Sorry, deferred taxes rather, and the accounting for deferred taxes. So our next part now is that computational part, the part that I think will wake everybody up. So they've given us the statement of financial position of this company as at year-end 30th June 2016. And then they told us one important thing. Where was that? Note 4 says the tax basis of assets and liabilities are the same as their carrying amount in the draft statement of financial position as at that same 30th June 2016, except the following. So they've given us 4 things that are not the same, and those are the 4 adjustments we want to make. Of course, following the adjustments from the other things. So, and the question, the requirement says, calculate the deferred tax liability at 30th June 2016 after any necessary adjustments to the financial statement, showing how the deferred tax liability will be dealt with in the financial statement. Okay, so how it will be dealt with in the financial statement. So there are a number of ways we can go about this. However, when we come back now, we can spend our time on these 15 marks. We see property, plant, and equipment at 2.4 here. We see our property, plant, and equipment at 10,000 on top. Abi, 10,000 is the first line.
Yeah.
So we are going to compare 10,000 with 2.4, except there's any other information. And we can see that the carrying value of our asset is 10,000. The tax base is 2.4. Carrying value of asset greater than tax base implies taxable temporary difference. Taxable temporary difference times tax rate gives us a deferred tax liability. So the practical things that we have been talking about, we're now going to see them in this computation and look at the different aspects and how to make adjustments.